Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events I believe will be driving your trades in the coming days. Now, moving into this week, we've got this sort of legacy really of the non-farm payrolls report that we had on Friday. We had a fairly disappointing payrolls report that sort of was a little bit middle of the road really, just a bit of a miss on the headline jobs number, but also average hourly earnings dropping back to just plus 0.1% growth on the month. But generally speaking, the market was looking for a fairly strong number that would have been able to sort of paint in that September rate hike. It didn't get it, and subsequently the market is now going to have to start, I think, sort of moving back away from September. And to be honest, generally speaking, it is because you've got the Fed funds futures that are looking out for around about a sort of 20% chance of a rate hike in September now. And I think, to be honest, we're moving out towards December. I think December coming after after the presidential election as well. There's a whole range of reasons why. Also, I think that the Fed won't move in September. I mean, the data doesn't look especially strong. Inflation is still fairly sort of subdued. And as I said, that presidential election sort of means that it's going to be difficult and possibly politically motivated, or deemed to be politically motivated if they move in September. So I think we're going to be looking at more at December. So I think the markets are going to have to reprice that. The dollar strength that we've seen in recent weeks is sort of going to unwind a bit. I think you've seen a little bit of gains on the treasury yields. They'll come back lower. And also it'll be interesting to see what happens on equity markets. You generally see the equity markets pushing higher in dovish times, and we could see a little bit of a move further to the upside. But generally speaking, I think equity markets look fairly fully valued up around these levels. So for the rest of this week, well, we've got a whole load of central bank meetings actually. We've got 3 central bank meetings. You've got the Bank of Canada, the Reserve Bank of Australia, and also the ECB all this week. And you could see a bit of volatility around the Forex majors on the back of that, so just be mindful of that as we go through this week. None of them are expected to move on rates. However, you could see a fair amount of dovish sort of rhetoric around those meetings. And also the key mover of the early part of this week is sterling, and sterling is again pushing on that strong data that we've had through the PMIs this month. As they bounce back strongly, the service sector PMI has been the latest one to make the move. So big moves in sterling could be key, and that sort of ties in with what we're seeing on the Forex markets, where the Forex markets have been sort of moving around with this dollar move, with the expectations of the Fed rate hike. You've seen a bit of a retracement in the early sort of part of Monday. Nothing too significant yet, but it's still fairly mixed in terms of outlook on the euro-dollar trade. Nothing really significant. You're still holding above 111 figure. You're still below sort of 1230 to 1250, which is now a resistance band. So it's sort of in the middle of that range there. In terms of cable, you're still looking out for gains actually on sterling. You're seeing an improvement in the outlook. This sequence of lower highs that we've seen on sterling, that's now been broken, and I think now we could see a bit of a sort of a range trade in place for sterling. Bit of overhead resistance coming up, bit of overhead supply, and it'll be interesting to see if sterling starts to sort of falter a little bit on that rally. But certainly at the moment, the bulls have got the near-term momentum with them. In terms of your dollar-yen move, again, we've been in that big downtrend channel. That's been in place for so long, throughout 2016. Every time we see this RSI long-term indicator coming up towards 60, the market sells off. Now it's coming up to, it's around that 60 point again. It's sort of showing a few signs of finding a bit of trouble getting through the 104 resistance area. So it'll be very interesting to see. I think dollar yen could be a key one to watch this week. So what about your equity markets? Well, you've seen the FTSE 100, which has been fairly strong actually, but in the last couple of weeks we've seen a sort of a corrective slide, a really strong move on Friday on the back of that payrolls report. But I have to say that the sterling move could well be a negative for the FTSE 100, and start to see a bit of an underperformance if sterling continues to rally. So that's an interesting one to watch there. The DAX pushing back towards 10,800, Will it break out? It could well have that momentum near term. As I said, a lot of these equity markets are beginning to look a little bit fully valued. But certainly on the technicals, DAX is looking strong above the 10,375 area up towards 10,475. So pretty decent support area there. And in terms of your commodity prices, well, we've seen the gold price, which has started to pick up. We've seen oil started to pick up, and also silver. All these three key commodities which have been sort of moving around on the dollar. That dollar weakness that we'd seen on the back of Friday's payrolls report, and that could well continue through this week. I think that could well be a bit of a catalyst for upside gains in these commodities. I think gold and silver, two main priorities there, but also the oil price, which has had some very strong moves in the last couple of days. Monday morning, rumours of production freeze agreement between Russia and Saudi Arabia, certainly helping to boost the price of oil on Monday. Again, these rumours, they have been flying around. They do tend to cause volatility, but are they sustainable? Is it anything sustainable? Will there be a production freeze? It's happened time and time again where the market's been disappointed. Will it happen once more? The key meeting is out in Algeria at the end of this month. And finally, what are we looking out for the rest of this week? Well, as I said, basically we're sort of dominated by these big central bank meetings. You've got the RBA on Tuesday, the Bank of Canada Wednesday, and that big ECB meeting on Thursday. The ECB is not really expected to do anything. Draghi's likely to remain pretty dovish though. You've had some fairly sort of tepid PMI data in the last few days. The composite PMI for the Eurozone dropping back again. That's not going to help matters. You've got some fairly sort of underwhelming inflation data out as well. So it's not great for Draghi, and I think ultimately they're probably going to have to move towards some sort of further easing at some stage this year. Maybe not quite yet though, but it'll be interesting to see what he comes out with on Thursday. But generally speaking, these central bank meetings are going to dominate through this week. So with that in mind, I wish you good luck in your trading this week, and I will speak to you next time. Thank you.